Hey, good morning. I'm tired, but I'll be fired up for the bus ride tomorrow. A little bit going on this week, but not a lot of change in mortgage rates. They're virtually about identical to where they were this past week when I saw you. The 30-year fixed there, conventional conforming with no discount, it's up about 0.125, but that's what it's doing. It's kind of just waggling right now. No big moves. Either way, same thing, FHA, USDA, about 6.125 with no discount. On the bottom here, I have a 7-year fixed arm. That's on both jumbo and conventional. Loan amounts up to 2.5 million, typically with 20% down. And if you notice in the discount points column, I've got 1.5 in discount. Seller paid, potentially getting you into the 5.625 range. That's really approaching an attractive number on that one. You can buy the other loan types down as well. It just so happens that we get more bang for the buck on the 7-year fixed term when we try to do one of these big buy downs. We're getting a lot of movement in the rate. And so think about those. Could be a good thing. Also, remember VA down to a 550 credit score, up to a $1.5 million loan amount. A little chaotic out there, isn't it? Point one here, rates are static since last week. Point two, PPI is the yikes. PPI is the producer price index. That is an inflation gauge that measures how much it costs to manufacture goods and services. That came in really, really low last week, almost spooky. CPI, consumer price index, came in as expected. Inflation is kind of tame right now, or so they're saying. Point three, this Yemen conflict could uh, result in price of oil going up out of Iran or Canada. Price of oil goes up, inflation goes up, everything goes up. Point four, the retail sales were a little down. So it's really kind of a mixed bag right now, right? Um, Fifth point here, the Fed meeting is today, and Powell will talk tomorrow about 10:30 a.m. our time. He tends to talk, and he really moves the market sometimes. We've got to watch out, see what he's saying. At point six, remember we have a $10 trillion refi this year. The United States of America is going to refinance a third of its debt, and it could be it would be very helpful to us, America, if we could refinance that into lower rates. So there could be some moves designed to bring the kind of rate reductions that result in mortgage rate reductions to help refinance this debt. That would be a smart play. Essent hasn't talked about it, the new econ guy, but there's some speculation going on that that might be part of what's happening right now with the tariffs and whatnot. Touching once again, I'm just having this slide in here, the family opportunity loan. You know, if you have a family member that you want to, get closer, a lot of people are telling me we want to get a 2 acre plot of land and build a, a bunch of houses on it, 3 or 4 houses on it. This can kind of fulfill that wish if people can't afford to actually build or anything like that, or pay for a second house for mom, because maybe you can put her in a garden home fourplex or a duplex or something like that where you have income coming in and you can get that 5% down payment as if you're an owner occupant on it. So this can be used creatively within the guidelines and can help you maybe keep somebody out of a facility, but yet close by so you can keep tabs on them. It's a cool loan. If you want to talk more about it, let me know. And I think that is it for this week. I will see you tomorrow morning. Thank you.